The Ethereum merge seems not to have been priced in, with the market pumping hard. In particular, Ethereum just going crazy over the last week, up like 30-some%, as the new date for the Ethereum merge has been announced for September 19th, and that just saw the price go nuts. Basically, Ethereum leading this market rally. But while I remain a long-term and hardcore Ethereum bull, the fact is that most investors are getting a lot of things wrong about the Ethereum merge. So in this video, what I want to do is to correct the record to an extent, because the Ethereum merge, it's awesome, it's exciting, it's one of the most important events to be happening in the cryptocurrency market this year. It's probably the biggest event ever to happen for Ethereum, and you need to make sure that you have the right information about this. So in today's video, I'm going to be covering just that topic. My name's Lark. I make videos on investing. If you do like that topic, then please subscribe to the channel. And if you want Ethereum developers to hurry the heck up and launch the damn merge already, then make sure to show your support for that by smashing the like button. Let's get into this. The first thing investors are getting wrong about the Ethereum merge is that the merge is going to lower fees. That is wrong. It will not. Sadly, we should not expect any relief to Ethereum's high fee situation for quite some time. Oh, sure, over the last few weeks, fees have generally been lower because there's a lot less demand to use the blockchain. But we are one NFT market pump away from, once again, having crippling fees where it costs $100 to do a swap on Uniswap. Don't expect any help on fees for Ethereum until we see new scaling efforts built directly into the main chain, such as sharding. That's going to be happening sometime, hopefully, in 2023. And while I am bullish on Ethereum and very bullish on the merge, we have to keep it real that the fee situation for Ethereum remains a real big problem for regular users coming on board. And that other networks like Solana, Polygon, along with Ethereum layer 2s like Arbitrum, which is nice to use, you want the Ethereum experience, go to Arbitrum. Though it will continue to capture users basically until this fee situation is fixed. Second misconception is that the market will be flooded with staked Ethereum after the merge. This, again, is just wrong. Staked Ethereum will not be able to be withdrawn until withdrawals are enabled, which is currently scheduled to happen like 6 to 12 months after the merge actually happens. So assuming that happens in September, we're looking at potentially late 2023. And even when that does happen, the staked Ethereum doesn't just get all unlocked at the same time. It's actually slowly unlocked with a max limit of around 40,000 Ethereum per day of the total 13 million Ethereum currently staked. So yes, that can bring in some sell pressure in a year's time when it happens. But that's still some time off, and we can speculate about the effects of that later, how many are going to restake, how many are going to sell, how many will be underwater at the time with the markets, all this kind of stuff. We'll get to that later. The third thing people are getting wrong about the merge is that the merge is not going to change the economics of Ethereum, which is super wrong, because in fact, the merge is the most significant economic event ever to happen to Ethereum. This is because the merge also comes along with the triple halving, which we've talked about many times before here on the channel. But in case you're new to the concept, basically this is going to reduce the total annual emissions of newly minted Ethereum down from the current inflation rate around 4.3% down to something like 0.43%, essentially meaning that the daily sell pressure for Ethereum is reduced from around 13,000 Ethereum per day to around 1,300 Ethereum per day. And unlike the proof of work system, where basically what happens, you have all these miners running network, they mine the coins, and they sell them, dump them constantly on the market, 13,000 Ethereum a day for cash. Stakers, though, they have the option to, yeah, of course, sell that 1,300 ETH, but a lot of them are going to reinvest to earn more coins, thus further reducing the sell pressure. Now, before I tell you about how the merge is going to affect the security of the Ethereum network and the staking rewards, let me just interrupt the flow real quick to let you know about our amazing newsletter called Wealth Mastery. So this comes twice weekly to your inbox. You get news, you get altcoin reviews, airdrop alerts, decentralized finance tutorials, and that's just the tip of the iceberg. It's an absolute value-packed newsletter, and you can sign up for the low, low price of free using the link down below in the description. Our members love it. I know you will too. It's an absolutely value-packed report, so make sure to check it out. Okay, let's go on to the fourth thing that investors are getting wrong about the Ethereum merge. And that is that staking rewards are going to go down after the merge. Remember, we're getting this triple halving, the emissions are dropping, and it's actually wrong. You see, because the estimates are that the staking rewards could actually increase by as much as 50% post-merge. Some estimates even go as far as saying we could see 10% APY on Ethereum staking for some time post-merge. Now this is particularly because all those transaction fees will now be paid out to stakers. Previously paid to miners, now we're going to be paid to stakers. And we're talking about a lot of money here. And look, we only have estimates to go by right now, but it is likely that we will see Ethereum stakers actually earning more by staking. So pretty interesting. And no, those rates are not going to last forever if we do have 10% APY post-merge. High rates will bring in more stakers, which will lower the APY that everyone ends up getting. But, you know, for a while, it's going to be pretty hot post-merge. Let's move on to the fifth falsehood. Ethereum is going to be less secure on a proof-of-stake network. Probably wrong. Look, at the end of the day, the divide between the proof-of-work crowd, predominantly Bitcoiners, although there are a few other proof-of-work coins that swear by proof-of-work, right? And the proof-of-stake crowd, on whether or not security will be adequate for Ethereum, or really proof-of-stake is adequate for any chains, is probably a debate that's never truly going to resolve itself in spite of all the evidence we have. But the theory is that trying to attack the Ethereum network under a proof-of-stake system will actually cost a heck of a lot more to attack compared to actually trying to attack it with a proof-of-work system. Because in proof-of-stake, basically you need to go out and buy like tens of billions of dollars worth of coins to even consider the ability to attack the network. And if your attack succeeds, then you lose tens of billions of dollars that you just spent attacking Ethereum. Not quite with proof-of-work though, where you buy a bunch of machines, you attack the network, and then you can go on to another network, potentially. Look, Ethereum is going to be totally fine in terms of security. In fact, it's actually going to be more secure under a proof-of-stake network, so don't believe that stuff. And our 5.5 of our list, because it's a maybe, is that some investors believe the Ethereum merge is going to be delayed again. That one could end up being true, actually. We shall see. Even though developers come out and they said, okay, September 19th, it's the day. It's the day it's happening. We've had lots of successful test nets already. The merge has actually been delayed many times already, so do keep that in mind. And this could be the time that we actually get there on time. Or it could be delayed again if any kind of bugs are discovered on the test net. That's why we have test nets, to see if there are bugs. So far, so good, but the situation can change quickly. If that happens, don't be super surprised, because it's tech. Hundreds of billions of dollars of value on the line here, so they have to get it right. But right now, this is the best case scenario that we could see the merge happening in about 60 days on approximately September 19th. Fingers crossed. This time it actually happens. I'm personally excited about it, so we shall see. Anyway, your question for today. Are you bullish on Ethereum leading up to the merge, or are you a skeptic and, you know, you have your money quite literally bet on another chain to be the big winner of the smart contract platform race? Let us all know down below in the comment section. Thank you for watching today's video, and peace out till next time.